Hi everyone. So today my teammate and I will present a CSR report analysis on Santos. Next page. First, we'll talk about company background and CSR activities. Next, we'll talk about the status and the reporting framework. Then followed by literature review and applicability and the supporting evidence of research questions. Lastly, we'll talk about strengths and weaknesses of the CSR report and suggestion for improvement. Santos is an Australian energy company, the country's second largest independent oil and gas producer. The scope of business are in Australia and Asia. It has 5 core assets, which are in Cooper Basin, Northern Australia and Timor-Leste, Papua New Guinea, Queensland and New South Wales, and Western Australia. The company was founded in 1954. In 1963, it has found its first significant discovery in Cooper Basin. And in the 80s, it has found discovery in Tirawara. In the 90s, it has become one of the major Australian operating enterprise. In 2004, it came out its first CSR report. And in the following year, it has came out with its first GRI report. In 2011, it has first production of liquefied natural gas. And in 2014, it has first joined the IPIECA. It has 7 pillars of the CSR report, which are climate change, community, economic sustainability, environment, health and safety, indigenous partnerships, and people and culture. CSR initiatives. There are 5 segments of the CSR, which are customer. For the customer section, it's inspired to decrease oil price by reducing costs. For the indigenous partnership, it supports indigenous business, and it also supporting farmers, create a positive legacy, and has 16 traineeships and cadetships. And for the employee, it reduces injury by training and education program. And for the environment, it aspires to achieve net zero emissions and 100% of water after treatment and zero waste to landfill.
Okay, thanks, Jiali. Now let me talk about the second part. Firstly, in order to figure out the status, we found the related ranking from CSR Hub website. The company ranks 70% among almost 20,000 companies and is a bit below the industry average. Next page, please. We also analyzed the status by using 2 theories. The first one is institutional theory. It's explaining how organizations act to external pressure from other organizations. Isomorphism is the main concept of it. So we compared the Santos with Woodside Energy, which has similar business model with it. We conclude that these 2 companies both including these 5 factors in their CSR reports. Next page, please. And under stakeholder theory, there are internal stakeholders, such as employees and directors, as well as external stakeholders, which are landholders, customers, creditors, and so on. Okay, next page, please. Oh, thanks. On the framework side, as mentioned above, There are 7 pillars, and it's provided a framework to ensure the company is operating in a sustainable way. The pillars are all in line with environmental, economic, and social commitments, which are the 3 parts of the triple bottom line. In addition, even though the CSR reporting didn't mention the information about IPIECA and JRR, we also found that the company joined IPIECA in 2014 and prepared reports follow the JRI standards over the past few years, but not in 2019. Moreover, the company provides integrated reporting, which are financial and non-financial reports. Now let's move to the next part, literature review and application. In the paper of TAR, the first one is that the company are more likely to disclose corporate social responsibilities in current year if there were high past cost of equity. And a voluntary CSR disclose leads to a lower future cost of equity. We apply this to the company by calculating the dividend growth rate, then obtain the cost of equity for the last 19 years. Next page, please. Then we have this chart. We can see that after 2004, which is the year the company starting release CSR report, there is a downward trend of cost of equity. And after 2012, the graph doesn't agree with the findings of the paper. We think there might be because there are other factors that affect the amount of cost of equity. For example, the company didn't pay dividend in 2016 and 2017. But we think the trend between 2006 to 2012 is the sufficient evidence for the findings of paper. Next page, please. The second finding of this paper states that voluntary CSR disclose attracts this dedicated institutional investor. We apply this to the company by analyzing the trend of the number of shareholders for the last 19 years. There is an obvious overall upward trend after 2004 to 2016, which are strongly in line with the paper's opinion. As mentioned above, it is likely that there are other factors that influence the number of shareholders after 2016, so there is a decrease, but we think it doesn't affect the application of the findings. Now, Jialin will continue his speech about literature review.
After we have analyzed ROI, which stands for return on investment, we found out that the company is is doing better year by year on the investment, which is consistent with the literature review, the JBFA article that which is the firm with higher CSR performance invest more efficiently. Yeah, could you go to the next page?
Hi, I'm Yumeng Liu, and I will introduce the GAE part. Literature review mandatory CSR disclosure has a negative impact on firms' profitability. GAE's article argued that the mandatory CSR disclosure can decrease a company's profitability. The profitability of the company can be analyzed from return on equity, return on asset, and other indicators. The better this indicator is, the stronger the profitability of the enterprise will be. Santos began disclosing CSR on December 22nd, 2004, which is close to 2005, so I am mainly focused on 2005 and beyond. The first indicator, return on equity, I calculated 6 years from 2004 to 2010. You can see that ROE has been declining year by year. expect for the 2008. So based on this index analysis, it suits what GAE article said. After mandatory CSR disclosure, the company profitability will decrease. And the second indicator is return on assets. Just looking at one index doesn't completely reflect the conclusion. So I calculated another index. Similarly, in the 6 years since the end of 2004, ROA has declined steadily, except for 2008. Based on the two data, I conclude that this is in line with GAE conclusion that mandatory CSR disclosure will reduce the profitability of the company. And note in 2008, Santos ROA in 2008 was unusually high, so I made a special analysis of 2008 fiscal year. Santos net profit after tax in 2008 was particularly high, which was 5 times higher than in the nearby years. There are several reasons for analysis. The net profit of $1.7 billion after tax include a $1.2 billion profit from the sale of a 40% interest in the project Malaysia Oil and Gas Major Petronas. Oil and gas price were increased in 2008, and the sales revenue was a record $2.8 billion. That's the reason why 2008 was higher than other years. So the high profit in 2008 contributed to the surge of ROE. And also, a later review, mandatory CSR disclosure would reduce industrial wastewater. We can find that from the graph that less and less water is being wasted in every year, from the original 4,000 tons in 2005 to 4,000 megaliters by 2008. It also suits GAE conclusion. And for the strength and weakness suggestion. For the strengths at the firm level, CSR is detailed and comprehensive. The report fully shows Santos' responsibility and practice around customers, partners, environment, employees, and etc. Santos closely combines own business development with the sustainable development process of the world. While providing more oil and gas, it will unite with a wider range of relevant parties to jointly build a cohesive and sustainable world. Additionally, Santos quantify target and details actual performance data. And the second one is about objective. Santos disclosure of good aspect, but also the disclosure of insufficient aspect, such as employee injury rate. For the reporting framework level, the first one is transparency. Santos information is relatively open and transparent. Santos' goal in 2025 is to become Australia's leading natural gas company with transparent information, which can improve the reputation of managers and attract more long-term investors and shareholders. And about the diversified market, Santos supply for many countries such as Australia and Asia, and produce all kinds of natural gas, pipeline gas, and oil gas. And for the weakness, the firm level is Santos lack professional vocabulary interpretation. The explanation of terms in this report is not strong enough, and some professional words are difficult to understand for non-professionals such as me. And for the reporting framework level, Santos lack multiple charts. Lack of trend charts such as more bar chart, line graph for the relative to competitors. The figure 1 shows Santos statistics on the injury rate of his employees, and figure 2 shows the competitor side. We can see that the line graph is easier to read than the column data. So for the improvement, the first one is increase explanation of professional vocabulary and improve the collaboration of the report. And the second one is add some readability graph like competitors. In conclusion, CSR is not only an economic and legal requirement, but also an ethical and moral requirement. Santos should not only grow bigger and stronger to promote the development of the social economy, but also should not seek profit to harm the interests of others. This improves Santos' corporate image with high-quality employees, expand the market, and reap rewards. That's all. Thanks.